a lot of people think it's just, the hard work that goes into it, but a lot of it actually stems from the mindset and getting your mindset in the right place to be able to continue to endeavor and endure a lot of the hardships and challenges that you're going to face as a real estate investor and entrepreneur, or whatever you're looking to get into.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
All right. Welcome, Decoding Cashflow listeners. Today, we have a pleasure to bring to you Aileen Prak. She is a real estate investor and a co-founder of Bonavest Capital. Her focus is on investing in multifamily syndication, both active and passively. She has invested in multiple markets, different states across the US. And she's also a co-host of the weekly podcast, How Did They Do It? And over there, they have till now interviewed more than 700 real estate experts. So welcome, Aileen, to the show. Nice having you on here.
Thank you for having me. It's nice to be on the show, Ted.
All right. So let's first of all, before we dig more into the real estate aspect, right? Let's if you can brief our listeners about your background, your story, what inspired you to get into real estate? How did you get into real estate? Yeah.
So for me, I did my background is in finance. And so I did the whole, I went to go to school, get good grades, follow the traditional path of, going to school, getting good grades, and then going off to get a stable career. Being in my culture and with my family's immigrants from an Asian country, they put a lot of emphasis on education and wanting to build a foundation. So one of the biggest things that I've taken away that I've grown up and I've always been instilled in me is, always build up a strong foundation for yourself through education, because once you have your education, nobody can take that away from you. You always have that. So no matter what you fall, if you fail in endeavors, you always can fall back onto your education and go back to it and build yourself up from the ground up. And so that's kind of how I go through life and I think about everything is always build up that strong foundation. And so for me, even though I was in finance, got a good corporate job, worked my way up through the levels, it didn't really click for me about creating wealth, passive income until I had a son of my own and started to have that family life where I realized how important time was for me and what I wanted to do with it and have that control over my own time freedom. And so when I had my first son, it was challenging because I was working a corporate job. I'm still working my corporate job, right? My work W-2. But at that time, it was hard because, I had to, after the maternity leave, I had to bring him into daycare. He was only 3 months old. And then we get a call from the daycare saying that he was sick. And I was far away. I had to commute and I took a van pool. So I didn't have means to get to him quickly enough. And so it was challenging. And that's when I realized I don't have control over my time. And I wanted to be there for my son, be there for whenever he's sick, be able to choose that time for myself and be able to choose it and spend it how I want to spend it. So that kind of led the journey of looking for different ways to build up your wealth and to create more of that time freedom. And so we always knew real estate was a great place to do that. We all know about single family investing. So that's how we first started, was single family investing. And then eventually, as we networked more and more with other people, we started to learn about real estate syndications and multifamily and how that you can join together and as a team purchase these large apartment buildings. You never really think about that in the past before. And so as you're driving now, you start noticing all these apartments and you realize, oh, hey, it's other investors just like myself, my husband, regular people who are able to come together, partner up and purchase these large buildings together. And so we pivoted into multifamily syndications, educated ourselves through podcasts just like yours, and then learned and really dived deep into that world. And we invested passively first as an investors, and then to get our feet wet, understand, have a proof of concept. And that's when we decided, we really like the space, wanted to also start our own podcast, did networking through that, and just eventually grew to where we are today.
Awesome. That's a great journey. And as you said, right, there was a one pivot moment in your life, right, when your son was sick, and you felt like you didn't have enough time to take care of him, right? As Tony Robbins says, the pattern needs to be interrupted at some point, and that was maybe the time when your pattern got interrupted, and you started looking for more venues to create a passive income, so you can have more time, freedom, and many others, right? That was your pivot moment. Like there are many other people who might have similar moments, like, lose their job. So, they have the W-2 job, they lose their job, then they try to figure out what is the backup for me. I hope I had some passive income on the side, to run all my financials. But yeah, there are many ways, as you said, right, to generate the passive income. One of them, multifamily. There are other aspects, commercial real estates, maybe, invest in storage units, strip malls. There are many other avenues. And you are mainly focused on multifamilies, as you mentioned, right?
Right.
Yeah. Okay. And you started with investing in single families, and then pivoted to started investing passively in multifamilies, learn how it works, and then actively participated with all the different partners, put a joint venture or syndication together, and help investors invest their money and get a good return.
That's right.
Yeah. That's great. So, what are the different markets you focus on, Eileen?
So far we've been focusing a lot on the Las Vegas markets, and then in the Carolinas, and like
Mhm.
Charlotte area, Winston-Salem. And then now we're looking into a little bit of Texas. We haven't done anything in Texas yet, but we're looking in those markets. But primarily the main deals that we've done so far has a lot been in the Las Vegas area.
Las Vegas, that's closer to you.
Yes, it's only a 4-hour drive, 3.5-hour drive on a good day.
Okay, maybe that's why you're more interested in the areas. Uh, but opportunities, as you said, right? In North Carolina's also, there are good opportunities coming up. Texas, yeah, it's pretty crowded, right? A lot of investors just trying to be in the same market, trying to maybe bid up the price. Um, But yeah, we have also started, looking into different markets, or maybe Rust Belt areas, Kansas City. I'm not sure if you explored that, but that's and Carolinas. We started investing in Carolinas too. So yes, you are of course investing in a really good markets. I hope uh, it will have a really good growth potential. Yeah. Yeah, yeah. And while you select your partners, right? Any specific criteria you keep in mind, like these are the checklists, like these are the things I want to make sure before I tie up with them.
Yes, I think so. The checklist has evolved over time, right? When you're still early on in your path of real estate investing, you're just looking for ways to connect and learn and just grow as fast as possible with everybody. And so the partnerships and what you're looking for is a little bit different. And as you start to evolve and grow a little bit more, you kind of realize that you have to be more particular about partnerships and who you're
Right.
working with.
Yes.
And then we kind of learned that through experience as we're meeting different people. I mean, the connection is really great. They're fantastic people, but the work ethic is a little bit different. Their goals and their values are a little bit different, not really aligned to what you're trying to accomplish.
Mm.
Communication style is a big key on how people communicate, the frequency of it. we like to be over communicated to. And so that's one of the things that we really look for in like partners now. It's
Yeah.
someone who has, a lot of transparency with us. The communication is key, and their values just align with us in terms of being open and honest and straightforward. And so those are the types of things now that's like solidified, and it's more challenging to find those partners that fit that criteria because it's
Yeah.
more defined now. And and of course the interpersonal relationship and the feelings that you get that as you're talking to the person, is there that initial connection? Are you able to feel comfortable with them to just pick up the phone call and call them? That has to
Yeah.
be there as well.
Yeah. That shouldn't be no barriers, between you, your partner. It should be very transparent. Whenever, as you said, right, whenever you want anything to ask or tell, you should be comfortable talking to them right away.
Right.
And
And
yep, go ahead.
oh, no, and the other last thing I wanted to say too was the partnership has to feel like on equal footing where you're adding value to it and the partner is
Mhm.
also adding the same amount of value. And so together you're able to accomplish something bigger together. And so when you're having an uneven balance, it makes a little bit challenging to work together as well. So you want to be able to bring value, and they should also be able to bring value as well.
Absolutely. So maybe if you are managing the investors relationship, make sure the others should balance out with the asset management or operationals, acquisitions. So yes, of course, it needs to be balanced out on all fronts. Any specific, you have been in real estate investment for a while, right? Any mistakes or any, I would say, situation that you encountered, which you would like to describe and to our listeners, and maybe ask them to be cautious about those kind of situations or mistake in the future for them. Yeah.
I would say on the same lines with partnerships is as
Okay.
you're getting to partnerships, make sure you're getting in the right partnerships because those can make or break deals. So I can give an example on, we took on a project, a master lease option, where we are leasing out an entire property out from an owner because we were trying to do some creative financing. The rates had increased. And so the price that we were offering at that time didn't make sense anymore, but the seller still wanted to work with us in our group. And so
Mhm.
it was challenging and we were trying to figure out an even ground. So we came up with the master lease solution. But when we took on that project, we realized as we took it over and started operating it and running that property that it was a big challenge because initially there was a lot of mismatched books. There was a lot of other legal issues that were going on. We found accounting things. Some of the tenants had band together and found out that we were, there's another owner or like another operator trying to work this properties. And so we faced a lot of challenges, but because we had a strong partner who was able to work together with us to overcome these challenges, we've been successful in overturning a lot of those issues. Where
Mhm.
now, the property is much more clean. We've gotten good tenants. We've overturned a lot of the negativity. It used to be a place where there was a lot of like drugs and violence and things like that.
No.
Even though it was like down the street from the police station, there was still a lot of
Yeah.
that going on. But because we've cleaned out a lot of that now due to our partnerships, we were able to, see a lot of that successes. And if you didn't have a strong partnership or if you didn't have people who knew what they were doing, that deal could have easily gone south because we didn't take any investors. All that money that we put in has been our own money. And so there
Mm.
was a lot of things that we were counting on and making sure that that we were doing the right things and the right steps to be able to overturn the property, renovate it, bring it back up to full potential. And
Mhm.
so, working together is really important. And, we could have lost a ton of money if we weren't able to get all those and work those issues out.
So it's the experience of the partner that helped you overcome all the situation because he has been gone through maybe these kind of situations before, and
Right.
yeah. And similarly, like in any of the deals, like if you're starting new, or maybe if, it's better to tie up with someone who is really experienced. uh, you can leverage their experience, their knowledge, uh, and they'll help you you know uh, get you through all the different situations or difficult situations.
Absolutely,
Yeah,
because
yeah,
especially as a new person coming in, you don't know what you don't know, right?
yeah,
And so having that experienced partner to kind of guide you and help you avoid a lot of those mistakes could help
yes,
you avoid a lot of costly mistakes, financial
yeah,
situations that, you could have avoided just by having or asking somebody who's done it, who's been there, who's faced these types of challenges.
yeah, absolutely. So that's what I would recommend. Any new real estate investors who wants to start in real estate, they are sitting on the side. Just, if if you don't have if you are just sitting on the sidelines waiting to pull the trigger and afraid of pulling the trigger, just partner with someone. Just take leverage their experience, and in the meanwhile you will also gain some experience, and then maybe you can start your own venture or stay partner, continue the partnership. But yes, just take action, in short, regardless of you want to partner or not partner, that's a different thing. But take action and leverage the experience from the network or the people around you. Yeah,
Absolutely.
yeah. So any specific segment, like in multifamilies, right? Do you focus mainly on class A, B, C? What kind of properties do you focus on?
So we've primarily focused on the Class C properties in B areas. And so those are the
Maybe
ones.
when you said there was all the drugs and stuff and on the
Mhm.
property, just which I thought it might be
Yes.
class C area.
Yes, some of them have been Class C areas for sure. On the border, the cusps and things like that. And so, so we focus a lot on the value add types of properties. But of course, those value adds those do come with a lot of challenges.
Yeah,
And if you're not well equipped to handle those types of properties, it could
yeah,
go sideways very quickly. But that's where we focus on.
yeah. Yeah, as you said, like there is a lot of value add. There is more upside in class C if you know how to manage it properly, right? Yeah.
Right.
Exactly. All righty. And like recently, what do you think about the current market situation? Like with all the interest rate has gone up. Do you see any good deals coming in, flowing in? Are you still underwriting? Just if you can tell us, our listeners, what do you think about the current market situation?
Sure. So it's definitely been more challenging in terms of deal flow and seeing all that deal flow that we were seeing, years prior. What we're seeing now is it's a little bit slower. However,
Uh,
sellers now are more susceptible to negotiations and open to conversations on the different valuations of their properties. So
mhm.
even though the deal flow itself has been a little more challenging, you know, there's more negotiations involved now with the sellers, and we're able to kind of bring that value down to what is a little bit more realistic in order to meet those returns that we're projecting. um, so when you're underwriting and you're looking at these deals, you have to add more of scrutiny to it. You have to add more checks and balances, making sure you have the right amount of reserves in place, that you're not overpaying for properties. Because I think in the past you were able to, offer quite high because the market was generous in that sense where you could just quickly turn them over, and
Yeah,
the market was able to accommodate that increase. But then now it's much more challenging to do it. And so it's been more challenging. However, there are deals to be found if you're patient and you're looking to do maybe those deals that other people might not be interested in doing just because there's so much more effort that's involved into doing it. So you have to look under almost every rock, pretty much. And
yeah.
I'll share this one deal that we had just recently closed. We've been working on this one with the seller for a little over a year, uh, at this
Well,
point
that's a
on
quite
being able to
extended
close it.
time. Yeah,
Yes,
yeah, yeah,
to be able to close it. And so, I mean, there are deals to be made. It's just taking time. You just got to add more scrutiny to it.
yeah. And try to find more strategies or, yeah, avenues where you can do a value add, right? Everyone does the regular value add and underwrite the deals, but now it's the time when you need to find something extra
Yes.
to take into account. Yeah, absolutely. All right. Any specific advice that you would like to give to our listeners, like on real estate investments? Anything?
I think the biggest advice that I would give is don't be afraid to walk away from deals
Okay.
because
Yeah.
there are a lot of deals to be made, but they might not necessarily be the right types of deals. And so it might look good initially and you get emotionally attached to it, but you need to make sure that the numbers make sense, that the business plan makes sense. And if it doesn't, even if you're well into it, you need to know when to walk away, because
Yeah.
it could prevent a lot of hardships and difficulties and other things later on. And you can avoid all those challenges and mistakes if you were to just have walked away in the beginning.
No, that's absolutely true. Don't get emotionally attached. Just go by the numbers. Numbers does, tell the story, everything. Yeah. If uh, you don't want your as well as your investors' money at risk. So it's better to walk away if you uh, if the numbers doesn't make sense. Yeah. So just we are almost on time. Maybe Eileen, let's go through before we go through the final round of questions, I just wanted to open up a floor for you. Anything that you would like to tell our listeners uh, uh, about your real estate journey?
So if they are looking to get started or if there's something holding them back, you have to get past a lot of your limiting beliefs.
Mhm.
A lot of people think it's just, the hard work that goes into it, but a lot of it actually stems from the mindset and getting your mindset in the right place to be able to continue to endeavor and endure a lot of the hardships and challenges that you're going to face as a real estate investor, an entrepreneur, or whatever you're looking to get into. So if you're able to season your mind and get your mindset right, it really will serve you a lot more in the future.
Yep. Um, that's that's very true. It's all about what whatever you think, that's what you're gonna see. Like, for example, when you type in the Google, tell me good things about real estate, you're gonna see good things about real estate. Tell me some bad things, you're gonna see bad things about real estate. It's like if whatever you think, how you think, it goes in the subconscious mind, it gives a positive or negative waves accordingly, right? So instead of asking a question, telling yourself, I can't do it, just ask how you can do it, and the avenues will open up for you. It's all about uh getting your mindset straightened up.
Right.
Yeah. All right. Eileen, ready for the final round of questions? We can, skipping in account the time, we're almost there. So all right, so the first one, what is the one book that you will recommend to your listeners and that had the most impact in your life?
It has to be the Who Not How book by Dan Sullivan because
Mhm.
it shifts the way that you think a little bit because it takes you from asking yourself, how can I get this done? Because then it puts the pressure on you to try to figure out a strategy and a solution, but you might not have all the answers. Now it puts the question on who can help you get there, because now it's like, who are the resources that I can leverage to help me get to my goals or what I'm trying to accomplish much quicker? And so by asking that question, who can help me instead of how, it really changed the way I thought about business and how I approach things.
Okay. And the other question was, what is the best business or investment advice that you'll offer? But we already talked about it, but is there any additional you want to offer, or maybe we can skip that, go to the next question?
Yes. So I guess to kind of add on to that a little bit, it's
Okay.
get your foundation, your education base and study and make sure you do the due diligence aspect of it. But then at the same time, you need to apply that knowledge that you've taken away, because knowledge without application is just kind
Yeah.
of goes to waste in a sense because you're not moving the needle forward. So you need to
Yeah.
apply that knowledge that you've gained.
Yeah. Take action.
Yes.
Yep. Take action. Yeah. And what is the one way you like to give back to the world?
So for me, I would like to think that the podcast that I put together, similar to yours, is giving back because we put an educational platform out there. So we share stories about other people and how they've been able to build up their wealth within real estate. And hopefully other people can take that and apply it to their situation in their lives as well and grow their own wealth and help them achieve their goals and where they want to be.
All right. The final question, Aileen. How can Decoding Cashflow listeners get in touch with you?
So they can email me directly at Aileen, Aileen, at bonavestcapital.com. Or if they want a past investor due diligence checklist, they can just go to our website, bonavestcapital.com/checklist, and they can download that checklist for them to use on questions on how to evaluate and look at multifamily investments as a passive investor.
All right, great. All right, Aileen, thanks a lot. Thanks for joining and giving your background story advice to our listeners. It will be helpful to whoever is listening to the show. Thanks a lot for coming on the show.
Thank you so much, Ted.
All right, thank you.
Thanks for listening to Decoding Cashflow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cashflow, and we'll catch you in the next episode.